Parisian advertising company Publicis will spend $3.7 billion to buy Boston-based Sapient, an online ad company. Right now we're joined by Paul Whitfield, our Paris correspondent with The Deal. Paul, thanks for taking out some time to join us. Why is Publicis making this transaction?
Hi, John. Thanks for having me. Look, Publicis has a hole in its portfolio in terms of digital. Every 2 years or so, it seems to buy up a digital company, and then in the idea that this is going to sort of launch them into this space in a big way, and every 2 years they seem to need to do it again. It fills that hole. It also adds a little bit of quicker earnings growth to Publicis. Sapient's growing about 14%. Its revenues, Publicis grew at about 1%. So it supercharges their business and fills an evident hole that they need plugging still.
And yet at 44%, the premium being paid for Sapient represents a price beyond its all-time high as a share price since its 2011 IPO. So why is Publicis spending so much for Sapient too?
Okay, well, again, it comes back to this idea that they've got to fill this hole, and they are paying a lot for it. They're paying around about 21 times the trailing year earnings. To put that in context, these deals tend to go for about 14 times earnings. Publicis paid 14 times earning in its last acquisition, which was of LBI. These companies don't come cheaply. They're very specialist, and there's an awful lot of specialist skill in there. It's also a good deal for Publicis in so much as it does sort of slot in very much as just an add-on. It's not disruptive in the same way as buying another advertising agency that might have this same sort of business is. Sapient, it's a good bolt-on acquisition in a specialist business that does exactly what Publicis needs.
And obviously at $3.7 billion, the transaction is a very sizable one for Publicis, but there's an even bigger deal that failed for Publicis, its merger with Omnicom. So is there any chance that this transaction could fall apart?
There's always a chance that the transactions will fall apart. Look, it's difficult to buy an advertising agency. What you're buying is people, and you're buying very often a very strong corporate culture. This is what unraveled the Publicis Omnicom deal. It was the corporate cultures in the end. Publicis thought it was going to be enjoying a merger of equals. Omnicom clearly thought it was going to take over Publicis. And there was the clash from the top, and there was talks of clashes in middle management, and who knows how far that went down. With Sapient, there's a couple of things in its favor. First of all, it's going to be run as a separate unit. So Sapient will become sapient.publicis, publicis.sapient, and it will, in that way, the culture won't change so much. It'll continue to run as it is at the moment. You don't have so much overlap in terms of the business that they've got at the moment, and the Sapient management stays on board at the top, with the CEO staying on. They've also got 18% of the shares committed from the Sapient co-founders and the Sapient CEO. So, this one's going to go through, I think.
All right, and no question, obviously, as to who is buying who here. Paul, thanks for taking out some time to join us for our Monday morning merger talk. There's obviously more advertising deals on the way, both online and offline, and we'll be tracking them at thedeal.com.